presentation of Financial Crisis Recovery.
Foreclosure, short sales, bankruptcy, credit card debt, job loss, depreciating home values, money management. Peace of mind when it comes to your finances seems completely out of reach under current conditions, but there is a way to achieve it. For the next 60 minutes, you're going to find out how to cover your assets. Cover your assets.
There become a personal loss, which you and I both know when you've got a loss on a principal property or on an investment property that's for personal use, it is non-deductible. So the IRS looks at that and says, okay, you have a non-deductible loss, but guess what? You have debt forgiveness of ordinary income, which is taxable. A very nasty situation.
A very nasty situation. So, you know, the complexity that is involved here is often not only that, but then also you'll have people who will take out mortgages or refinance second mortgages, and then when they take that extra money from a property who presumably appreciated. So if we take the same scenario we've just described, $200,000 purchase price, house appreciates over the years and is now worth $300,000, and someone takes out a $50,000 second mortgage, that whole situation isn't the same any longer because that extra $50,000 did not increase your basis. Your basis remained the same, and now, unless you've reinvested that money into the home, you could wind up with a big fat tax problem. Explain that a little bit about that.
Okay. Well, you're talking about now a principal residence.
Yes.
So if you take that principal residence and you did use that money to take vacations or maybe pay for your child's education or their wedding, anything other than putting that money into that home.
Or God forbid, invest it into another investment property. Huh?
Or God forbid, invest it in another investment property. Exactly. Anytime you use that money for something other than improving your home or the original purchase of your home, it would no longer qualify for the principal residence reduction to exclude that gain from the sale, or not gain, I'm sorry, to exclude that taxable income from the debt forgiveness.
So you would not be able to use that to offset your 1099 income. As a result, you'd wind up getting taxed. But there is a way where you might actually be able to do that. That's called a step-up. Explain that.
Okay. The way the step-up in basis works is, and it doesn't qualify for a principal residence. It only qualifies when you've got investment properties. If you had number of investment properties that you were selling or were having foreclosed on, and your basis was at a certain number that was below what the debt forgiveness income was going to be, and so you didn't have a loss that you were able to offset that debt forgiveness income, but you had other properties that you were hanging on to, you have the option to take that debt forgiveness income and roll it against the basis to reduce the basis in your other investment properties. So at the point that you do finally sell those properties, or God forbid they get foreclosed on, your basis will be reduced, which will then create a taxable event, but that taxable event will be created as a capital gain from the sale of an investment property as opposed to ordinary income.
And lastly, what if you're depreciating a property over time? What does that do, if anything, to your basis?
Well, when you've got depreciation, obviously you've taken those expenses off of previous year's tax returns, and so your basis in that property may be considerably less than what the actual debt is that you owe. So at the end of the day, you get a 1099-C for $100,000, and you have a sale price that is equal to the basis in your property. So now you have no loss to be able to offset that income, and now you're looking at just ordinary income to have to pay tax on for that debt forgiveness.
Wow. So if you're sitting there listening to this and you become utterly confused by all of this, this is the very reason you need to come and see someone like Arliss Richardson LTD, because they can weed through these problems and tell you what your taxable income is, if you're going to wind up with taxes, or maybe you may forego taxes as a result of some other things we're going to be talking about later on here in the show. The main thing is, whenever making decisions, you have to have all the information with which to make decisions with. This is why I always encourage my clients to go and see Arliss beforehand, so that they know all of the implications related to a particular decision before they choose to go in one direction or the other. Never tell people what to do. That's not what my job is. My job is to provide you with information with which to make the best decisions. And when I rely on somebody like Arliss Richardson, I know that they're in good hands, and then we come back to the table understanding the full impact of that decision financially, tax implications, and we can make very good decisions. So when we come back from our break, we're going to be talking some more about tax implications related to real estate losses, 1099s, and things of that nature, and how someone might be able to forego that. Even if you do have tax, there may be issues that might allow you to forego tax, things like insolvency, bankruptcy, and things we're gonna talk about. So want to offer to everyone the Financial Crisis Bible. If you are in a financial crisis, if you have the issues that we're discussing and you have concerns about these things, go to www.financialcrisisbible. This is a free download for people who are already facing a financial crisis or for those who want to ensure that they never will be. So for anyone you know who could benefit from this information, have them download the Financial Crisis Bible. It is free, www.financialcrisisbible. We're going to take a break, and we'll be right back with Arliss Richardson talking about taxes and tax planning. We are back. All right, you're listening to Cover Your Assets. We are here with Arliss Richardson. Arliss Richardson is my favorite. Not only is she the best CPA I've ever worked with, but you know, there are times when you have such rapport with a person and you literally like them and enjoy working with them, which obviously always enhances your working relationship, especially when you have a client that you're interacting with and you've got more than one professional. It's just wonderful to be able to talk to someone like Arliss Richardson who understands the situations related to these issues, that being real estate losses and passive, or the losses related to negotiating debt and things like that. So want to again encourage everyone to call in. Any questions you got, give us a call. That number 651-646-8255. I'll say it again, 651-646-8255. Give us a call with any of your questions related to tax and tax planning. We have Arliss Richardson, LTD, our crack CPA. Arliss, would you do us a favor real quick and give us your contact information so anybody out there listening who wants to get in contact with what I consider to be the very best CPA on the planet, that they can get a hold of you?
Well, thank you, Todd. I totally appreciate your referrals and all of the wonderful comments that you've said. I work very hard to make sure that I don't let you down and disappoint you. But for those of you who have questions or concerns, just want to be able to talk to somebody that is a human being that understands what you're going through, I would love to sit down and talk with you. I offer a 1-hour free consult just to try to kind of understand and fill you in on what you've got ahead of you. So my contact information is Arliss Richardson Limited. I am located in Shoreview. That's 3460 Lexington Avenue North, Suite 125, Shoreview, Minnesota. My phone number is 651-482-0122. And my website is www.accounting-offices.net. I've got a staff of 5 that is ready and willing to work with you, and we would love to be able to help anyone out. So please don't hesitate to give us a call. Again, my phone number is 651-482-0122.
Very good, very good. And I wanted to make sure that you got that in twice. Also, bear in mind, folks, that you can go to our website, which is CYA21, that representative of Cover Your Assets in the 21st Century, CYA21.com, and you can find Arliss and a direct link to her website as well. So, you know, listen, a lot of people are concerned that if they're going to short sale their homes, and Lord knows there's a lot of people out there who are considering these very things, and if they don't complete the short sale before the end of 2012, they may potentially have additional tax because of the debt forgiveness specific tax treatment that was written into law. If they're unable to sell their homes before 2013, Arliss, what are the specifics behind this, and how could this change or affect people after 2013?
Well, it could have a big impact on people because right now, through the Debt Forgiveness Act that has been put into law, if you sell your house before 12/31/2012, and if you qualify as it being your principal residence, and if you qualify to where the debt that you mortgaged on your home was used 100% for your home, whether it be a purchase or through improvements, then that debt forgiveness from the short sale of your home would be excluded through the principal residence exclusion. So there's a big benefit to being able to short sale this home before December 31st of 2012. After that, that exclusion goes away, and you're looking at potentially taxable income at ordinary income rates for 2013.
So the first thing that comes to mind is, how do I demonstrate that this is my primary residence as you've described it? What are the particular parameters that allow me to demonstrate that, in fact, if I've got a lake home and this home and I split the time between them, how do I demonstrate that one or the other is my primary?